Hi, my name is Tammy Johnson. I'm a manager in the tax department here at Miller Prost. I have over 20 plus years in tax management and looking forward to sharing this information with you.
Thank you. So hopefully everybody can see my screen, but just a little bit about Miller Prost, and you know, we like I said are a full service CPA firm, and so we've got tax and audit in the consulting side, and hopefully we can during this presentation provide some insight into each of those areas as you evaluate and consider doing business in Irvine and Southern California. So with that, you know, we developed some topics that really we thought would be of most interest, and these are really the topics that, as we have met with several folks that are considering Irvine as an opportunity to do business, we've met with several folks, and these are some of the commonly asked questions and information that we provide. And so that's what really drove the agenda for today's webinar. So we're going to cover just some standard taxes and filing requirements for the United States and California businesses. We're going to go over just some of the tax incentives that are available, both on a federal level and California level. Differentiate between the types of financial statements for U.S. companies, because there are different types of financial statements that really have different audience and intentions for different audiences and levels of outside reliability in terms of the quality of numbers and the ability to rely on those numbers. So we'll go over those. Provide some small business resources that are always just good to know and have should you need any particular research. And then one of the last areas that always comes up is, what is the startup community like here in Irvine and in Greater Orange County? And what are some of those resources? So we thought we'd go ahead and share some of those resources with you as well. So as far as the taxes and filing requirements for U.S. and California businesses, there are different types of taxes. There's income taxes, California franchise tax, employment taxes, excise tax, and California sales and use tax. Now, that sounds like a pretty long list, but you know, these are not meant to be intimidating. These are just so that you know, as you plan, these are, you know, different requirements that will need to happen whether you're in California or any other state, honestly, in the U.S. as well. So income taxes, depending upon your entity type, you are taxed differently. So the entity types available are corporations, S corporations, which is subchapter S corporations is what that stands for, and then partnership and limited liability companies. So we'll just briefly go through the differences between all of those types of entities and how those entities are taxed. So there's pluses and minuses, and sometimes you're required to be a certain entity structure in order to do business in the U.S. and California, depending upon your ownership and different other requirements. So a corporation is your typical, you know, C corporation. You're taxed at the corporate level when the money is earned, and then if there are dividends that are distributed, then those dividends are taxed at the individual level. So it creates a scenario of double taxation. Now, the good news is the tax on the corporate level is 21%. So then that's a potentially lower tax rate than what you might get at some of the other entity types. But like, you know, I mentioned, you have to consider, what am I going to pay on tax if I want to take the money out of the business as a dividend? Another common entity type is an S corporation. S corporations have shareholders, and those shareholders receive K-1s, and they are taxed at the individual level. So this is what they call a pass-through type of an entity, and then the difference being, you know, your corporation will make money, and if you're just a C corporation, you get taxed at the corporation level. If you're an S corporation, that will flow through to the individual owners at the relative percentage and then get taxed at the individual tax rates. So that avoids the double taxation situation created with with a C Corp, and gives you more flexibility in terms of getting capital out of the company once you begin to grow and produce income. To qualify for an S corporation status, there are some requirements. You have to be a domestic corporation, and only certain types of shareholders are allowed, mainly individuals, certain trusts, and estates. A S corporation owner cannot be a partnership or a corporation, so that may limit some opportunity there. You have to have less than 100 shareholders. You can only have one class of stock, and we already mentioned that you have to be an eligible corporation, so not an ineligible corporation, such as those listed. In California, S corporations are required to pay tax at the corporate level, even though they are a flow-through entity. So keep that in mind, and we'll give you some insight into what those tax rates are. Partnerships, again, it's a flow-through tax at the individual level. There's an annual return just like the others, and it does not pay tax at the federal level, nor does it pay tax at the state level, California level. So everything is taxed at the partner level. Partners technically don't get paid as salary, so they don't get a W-2. They just have, their share of the net income, and they potentially could have guaranteed payments as well. Another option is a limited liability company. This consists of, as opposed to owners, they're called members. State by state rules vary on LLCs, so you want to make sure you understand the states that you're operating in if you're going to operate in multiple states. And then there's some other caveats along with that. The biggest being, it can be with an LLC, you can choose to be taxed as a corporation, a partnership, or if you have a single member LLC, then it is officially included on your individual personal return. So something to keep in mind there. And then you'll just see some of the other requirements. And that last point, an LLC must be taxed the same, either as a corporation, partnership, or a single owner for both California and federal tax purposes. So a few nuances to consider when you're selecting your entity type. So we've talked a lot about taxed at the individual level. So all of those flow-through entities are taxed at the individual level. So corporations are a flat 21%, but all of those flow-through, pass-through entities come down to whatever your individual circumstances from a tax perspective. So I laid out our federal income tax brackets for 2020, and really it depends on your filing status, whether you're single, married filing jointly, married filing separately, or head of household. And the tax rates range from 10 to 37%, depending upon your income level and filing status. So this is good information to consider and evaluate when you determine what type of entity and how do we want to structure this. On the California side, in a similar manner, there's the single taxpayer bracket, and then there's married filing jointly to give you an idea of what the income tax rates are based on your level of 1040 or personal income. The range is anything from 1% up to 13.3% on the California side. So this would be on top of your federal tax as well. California franchise tax. This is a different category of tax. You've got income and then you've got franchise. Franchise tax is required if you are incorporated or organized in California, doing business in California in any way, shape, or form, or qualified or registered to do business in California. The franchise tax is equal to the larger of your California net income multiplied by the appropriate rate, which will be on the next slide, or $800 is a minimum franchise tax. So if you make $0, you would still owe $800 in franchise tax. Again, if you're active, inactive, operating at a loss, filing less than a short year, you will owe this California franchise tax. The tax rates are indicated in this slide, they apply to both the corporate franchise tax and income tax for California. C Corps pay 8.84%. So that's the equivalent to the 21% on the federal side. C Corps pay California 8.84%, and S Corps pay 1.5%. So that'll give you some insight and for planning purposes when you're deciding what entity you want to organize to do business here. LLCs and LLC taxes and fees. If you are an LLC, you will have an annual tax payment of $800, and then you will have a fee based on the table indicated there below. So that's just a little nuance on the LLC side. Employment taxes. So if you have employees or owner employees, there are certain employment taxes that are due at the federal level and the state level. Federal includes Social Security, Medicare, unemployment, and then you've got employee withholding. Social Security and Medicare make up what they call the FICA tax. The FICA tax is 6.2% for Social Security and 1.45% for Medicare. The Social Security portion of that FICA tax has a cap, so any wages paid up to $137,700 in 2020 would get 6.2% charged for Social Security. And then Medicare is on all wages. There's no cap on that, and that's 1.45% on all wages. So if you are an individual that has wages in excess of $200,000, or you file jointly, married jointly, in excess of $250,000, then there is an additional Medicare tax withholding that applies. So that would be over and above the 1.45% indicated in the slide. Then on the California side, the California employment taxes are administered by the Employment Development Department, EDD. And there's unemployment insurance, there's the employee training tax, state disability insurance tax, and then your California personal income tax. Unemployment is getting a lot of news lately. On the California side, basically, employers pay into this up to the first 7,000 of wages. The rate is between 1.5% and 6.2%. It is determined by the lawmakers, and you must abide by that. The employment training tax is a training tax in California that goes to train employees in targeted industries to maintain competitiveness, and that's 0.1% on the first 7,000 of wages also. State disability, this is should workers become disabled, this allows them to have benefits and pay wages if they're unable to do their regulatory or customary work related to one of those reasons. So every employer pays into that at a rate of 1% of taxable wages on the first $118,371 of wage. And then the California personal income tax, this is withholding for each employee that, based on their W-4 and their particular facts and circumstances, they get California tax withheld from each paycheck. Excise taxes. So excise taxes are both on a federal level and a state level, and they're paid when purchases are made on a specific good. So an example of that is gasoline, or alcohol, or tobacco, or aviation, or those kinds of things. So if you are going to be selling those, you should know and understand excise tax laws and what's included as taxable for excise tax purposes and what those taxes are in terms of a percentage or a dollar. So there are folks that specialize specifically in excise tax, so it can get pretty nuanced. The point of this slide is just to make you aware that this is something you need to consider as you evaluate doing business here in California or the US. And then there's California sales and use tax. Typically, sales are on, on the retail side when you're selling a good. or a product. The Irvine sales tax rate is 7.75%, which is composed of a 6% California, 0.25% Orange County, and then a specialty tax of 1.5%. So sales tax rates differ based on your city, county, and state. And then a use tax is similar to a sales tax, but it's based on storage use or consumption of goods purchased from retailers that do not charge sales tax. So that is typically in your mail order, your telephone, or internet sales. The use tax rate is 7.5%. And those funds go to the general fund of cities and counties and states, as well as any local initiatives also. So we've talked about all the taxes that you may owe. Well, here's some opportunity to recoup some of those taxes and lessen your tax burden. This is probably of more interest, but I want to make you aware that these are just a sampling of the programs available, some of the more commonly utilized programs, but there's the research tax credit. So for California and the state of California, and the US, I should say, if you're developing or improving new products, processes, formulas, techniques, or inventions, you can apply for and file for, rather, research tax credits. This is done in conjunction with your tax returns, and it requires a study to capture the qualified expenditures and the time spent doing those qualifying activities. Work opportunity tax credits, if you hire individuals within certain categories such as veterans or low income or those with criminal histories, there are hiring credits available between $2,400 and $9,600 per employee. So that is good news. If you're hiring different types of folks, you can get some instant tax credits to your benefit. Cost segregation studies. Are when you reclassify assets to shorter depreciable lives. So if you're doing a remodel or building out a property, you want to make sure that you don't include everything in just under the category of building improvements or building. You want to break it out into smaller segments that can be depreciated faster, which allows you to save on taxes sooner. Energy efficiency tax incentives, section 179D. If you're doing a reno or building a building that is going to be more efficient in terms of its energy or power costs for lighting, HVAC, or the overall building envelope, there's up to $1.80 per square foot available as a deduction for those types of improvements. And then there's qualified opportunity zones. So a couple different things on that. There are some qualified opportunity zones in and around Irvine in Orange County, and you can either invest in those, potentially tax deferred, maybe tax free if you do that right, or if you're looking to find a location, it may be worth looking into those areas as well. So as far as the 4 types of financial statements for U.S. companies, very important to know the difference and the ability to use those financial statements. So we'll start with kind of the least expensive to the most expensive, and then the least formal to the most formal. So preparations are a relatively new concept in the U.S. financial statement world, GAAP world. So preparations are basically internal financial statements produced, and there's no formal report, and it'd be similar to what your in-house accountant or CFO may do. So sometimes it may meet the need for lenders, and other times, they may require something of a little more complexity or reviewed by a CPA. So the second one, compilation, there are many lenders that are okay with compilations, but the intended use is lenders and outside parties, and the CPA will issue a compilation report. It's not an opinion on the financial statements, it's merely saying we didn't see any glaring errors, is basically the level of service there. A review is a little more extensive. It relies on analytical procedures. A lot of lenders, especially these days, will require a review at a minimum, and it comes with a CPA review report. Again, it's not necessarily an audit level, but it's more in-depth, relies on analytical procedures and inquiry, and gets you, financial statements that you can provide to outside parties. And then the last type is an audit. That is pretty well understood, but that's where there's testing and an evaluation of internal controls, and there's a formal opinion as to whether or not the financial statements present fairly in all material respects the financial situation of the company. This is the highest level of assurance, and often required if you're seeking outside investment or satisfying different financing requirements. Some common small business resources. There's obviously the Greater Irvine Chamber of Commerce. There's a multitude of resources available through the chamber, whether it's programs or events or checklists or forms. All of these resources have all these organizations listed have excellent resources available. There's a Small Business Development Center that has a great set of tools and templates and puts on really good programs for those small businesses. The SBA is in the news a lot in the U.S. right now because of a lot of the loan programs with the COVID-19 disaster loans and paycheck protection programs that are going on. But outside of that, they have financing options and resources available to small businesses that may not necessarily qualify for traditional bank financing. So the SBA is a great place to look for funding if you can't find anywhere else and you're not ready to go to that investment route. Within the SBA, there's a SCORE, Small Business Services. These are retired executives that volunteer their time to small businesses and help them with anything from coaching to financials to HR, how to do this, how to do that. They're just a really good overall resource for your growing small business. And then there's the U.S. Chamber of Commerce. That's the nationwide Chamber of Commerce. And then the California Secretary of State, actually the two California Secretary of State and the Office of Business and Economic Development, they have really good resources on their websites as well. It really walks you through, what do I need to do to register my company in California? What are the considerations, with step-by-step checklists and those kinds of documents and templates. Very good resources for that. And then there's the Cal State Fullerton Center for Family Business. That is also an excellent resource to investigate and determine if it fits your need. And then there's the startup company. Irvine and Orange County have a tremendous startup community. And I just wanted to spotlight some of those resources available to your business, startup and recently organized companies. The Tech Coast Angels, they're an early stage investment organization. They're typically looking to invest $50,000 to $1 million in the life science, software, internet, or clean tech spaces. All of these you'll find have different niches. Some are incubators, some are just resources for groups to get together and make introductions. Some are better suited for early stage or late stage, seed money or Series A, Series B. So all of them have a little nuance that you'd want to investigate and ask questions about. But stage, size, and industry, you can find what you need here in Irvine. The UCI Beal Applied Innovation. UCI is our local university, one of our local universities, and they created the Cove. And the Cove is a shared office space and facilities dedicated to entrepreneurs. And they also put on and host events and really provide an ecosystem for entrepreneurs to utilize as they begin their journey here in Irvine. 1 Million Cups. This is really designed to educate, engage, and inspire, according to its website. And they provide various tools, resources, programs to help you develop your business plan, to work through some of those what-if scenarios and really take your business plan and your strategy to the next level. Octane is an accelerator. It has an accelerator called Launchpad, and it's really focused on technology and med tech within Southern California. And they are like I said, a great organization, lots of resources, have connecting events, and then they also have this accelerator arm called Launchpad. The Orange County Startups Council, they focus on technology and software, and this is really a great place to make connections and meet folks that provide services in all different aspects of technology and software, including funding. Startup Grind OC, this is another ecosystem organization that really just tries to create the environment and let the startup magic happen through the different members and presentations. The Monday Club is a little more formal. They focus on high tech. They are considered venture capital, and they've got quite a bit of the end investors, if you will, in the room when they meet. And you're doing, if you're selected through the application process, you're doing your pitch, and they ask very pointed questions beyond the surface with the intent of being able to further that investment discussion. And then EvoNexus is the last example I have on the slide. That's an incubator, and it really is focused on life science, fintech, and technology companies. So if you're one of those areas, you definitely want to look up EvoNexus and see if that's a good fit for you. So I know we covered a lot of information and overview, and there's different levels of detail in each one of these areas. But based on our feedback in our preliminary meetings with companies that are evaluating doing business, we think we put together some good high-level resources. And of course, as you get further in the decision-making process through the Irvine Chamber or directly with us, we encourage you to reach out and ask us questions, and we'd be happy to help. And Tammy, I know Tammy represents our tax department on the line, and she'd be happy to help you as well. And Tammy, if I have left out anything, please let our audience know, and if not, then we can open it up for questions.
Nope, I think you've covered everything.
Very good. So Pepper, I think at this point we're ready to take any questions.
Well, you did a great job, Greg, explaining everything. I even learned a couple things. You don't have any questions. It's amazing. So that's an exemplary testament to your powers of persuasion. Greg and Tammy, we want to thank you both for an incredibly informative and current update on the status of the tax situation here in the States and the current circumstances. I'm sure our viewers feel a little more confident in their tax-related preparation thinking thanks to your advice. To everyone listening, please feel free to reach out to Greg directly should you have any further questions about this. Otherwise, if you're ready to take your next steps to expand to Irvine and Southern California, please reach out to Linda DeMario, the Executive Vice President of the Greater Irvine Chamber, at the email provided. We're here as a resource and ally for you in your expansion process, and we can connect you with the experts, partners, and the resources you need, so don't hesitate to send us a quick email. We urge you to check out our next webinar installment and join Irvine Gateway experts Andrew Bernstein and Elam Malik from Jackson Titus, who will guide you through the legal considerations for establishing a business in the United States and provide insights, implications, and imperatives for short-term and sustainable success.